M&A making a comeback, big deals. Union Pacific's acquisition of Norfolk Southern, Baker Hughes' acquisition of Chart Industries. They are fueling hopes for more momentum. IPOs, by the way, we talk about it here, of course, all the time. They've been performing quite well. Top names have been drawing strong demand. Morgan Stanley's global co-head of investment banking, Eli Gross, joins us now. We'll talk more about what is driving this and obviously the hopes and dreams for bankers like yourself. Let's start with M&A. Eli, we are seeing more demand, and I've certainly been hearing a lot lately, in particular about potentially even larger transactions. Have we hit some sort of, period where strategics can really start to think big again?
Well, I think the reality is we are seeing that activity, particularly from corporates and strategics. The reason is the backdrop sets up well for, continued rebound. The macro environment's not perfect. It's pretty good. GDP, earnings growth, the direction of travel on interest rates, economy is high, and so what you'd expect to see is what we're seeing, which is big deals. Union Pacific buying Norfolk Southern. I used to cover the transports for the majority of my career.
Right.
So I'm partial to it.
You couldn't have imagined a deal like that at some point.
Well, we imagined it.
Yeah, but you could never imagine it would get actually.
It got announced.
Right.
And what's probably misunderstood is that is the largest M&A deal across any sector in 5 years. Yeah. So end-to-end supply chain helps the U.S., helps access to markets. But as you said, Baker Hughes buying Chart Industries. Also, if you look at even the banking sector, regional banking, which I know you've talked about for many years, there are 4,000 regional banks. Now we're starting to see the consolidation there. So a couple of weeks ago, we worked with Synovus and Pinnacle as they merged together. So we think corporate M&A on the back of increased confidence, delevered balance sheets is going to continue.
Now, you mentioned the rails deal. I mean, a lot of that depended on what seems to be support from the Trump administration. We'll see what the STB ultimately says, but generally speaking, there seems to be support there. We came into this year believing that we would see a wave of M&A. It didn't happen. Tariffs, so many other things. Is the regulatory environment now at a point where, again, corporations can think about doing things like that perhaps they could have thought about but never actually announced?
Sure. Well, as we think about regulatory, there are two dimensions. First is just regulatory in the concept of red tape. And the administration certainly is looking to eliminate red tape. If you look at the banks, certainly close to our heart. Obviously, some deregulation there. It looks like it's in the offing. But as you look at two M&A combinations, strategic combinations, and the antitrust review, I think what we would say is that the administration is still focused on competitive overlaps potentially, but the rules of the road are better known. And so when we're talking to boards, when we're talking to CEOs about potential combinations, it's clear that the increased confidence on the rules that will be applied to the transaction that they're considering is giving them the confidence to announce these big deals. So Union Pacific would be one. Obviously, Google and Wiz would be another.
Right. You think we'll see another big rail deal? We'll see CSX and Burlington Northern need to get together? Does that make sense in your mind? I know Morgan Stanley advised on the UNP transaction.
Well, if anything does happen, we certainly hope to be a part of it. But what I would say is, deals do beget deals. And to your point of why we're seeing increased activity, if a competitor announces something in a space, every other boardroom that's in that space gets together and say, what are the strategic implications for us? Is this helpful or hurtful? So the rails is a small industry in the sense you have a handful of railroads. But no doubt that applies to every industry as people look for what's next.
I wanted to ask you about IPOs because you led some of the big ones recently, Figma, CoreWeave. The fact that we got such big one-day spikes, I mean, is that really a healthy sign for IPOs? Because it also reminds me a little bit of 2021 and makes you wonder whether that kind of stuff is sustainable.
Sure. Well, I would say the main message is that IPOs are back. And absolutely, looking at Figma, which we led, obviously the stock price performed well. Now, obviously, the company has a hand in saying where does the stock get allocated, what price do we allocate it, et cetera. And we did it in combination with them. But if you look at Figma or Chime, or even if you look back at CoreWeave, which we led, which is up over 300%, there's been a dearth of supply of IPOs. And the long-only demand from BlackRock, Norges, Fido is tremendous. So high-quality companies with a growth story, with a strong management team, with a compelling use of capital are going to be met with a very receptive audience.
You mentioned the macro. At what point does that create a second look or a second thought, or do you think it's the opposite? We got pretty good small business sentiment today. 5-month high on NFIB.
A second look from
just a friction, I guess.
Well, I think, look, we're just in a much different spot than we were in April. You know, in April, it was max tariff uncertainty, and the economic picture was good but not perfect. I think the tariff uncertainty has narrowed down here, and so the range of potential outcomes, given some trade deals have been cut, have actually imbued the market, corporate buyers and financial buyers with confidence. You know, the data is still to be determined. I think if you look at inflation, if you look at growth, you can see what you want in the data. So we're in a very data-dependent environment. I would say that earnings growth was very strong. Over 80% of the companies that announced in the S&P 500 beat expectations. Now, was guidance as strong as maybe some people would have expected? Maybe not. But there's no question that the outlook is positive. To us, it's a matter of how positive does it get.